Introduction. Key market factors.
Hello, things we're watching at Harvest through early March. Market vertigo, bringing it back to basics. Checking our economic gauges. What's working, defense, diversification, and monetizing volatility. And what's new and what's coming at Harvest.
Economic gauges.
For most investors, this is a time to bring it back to basics and really take a look at the longer term outlook for their portfolios and how they're allocated. And for many, in fact, most investors, there may not even be a lot of tactical changes to be made despite the macro environment that we're looking at. And in fact, when we look at some of our quantitative economic gauges, things aren't nearly as bad as the headlines or some of the bearish rhetoric would suggest. The Chicago Fed Index is a great example of a composite indicator of 85 indicators in total that tells us that the US has in fact threaded the needle and staved off a recession, only the third time in the past 10 interest rate hiking cycles. Other key areas of the economy that really give us some direction, areas like the job market, inflation data, some of the interest rate data, importantly for equity investors, recent quarterly earnings and growth expectations are actually doing okay. And that's the good news. But we also have some indicators that are more mixed. Valuations in some pockets are elevated. Domestic Canadian economic data, although we've seen some recent green shoots, are showing some signs of risk. And it's abundantly clear heightened geopolitical risks across the world are elevated, and there's potential risk that business actually slow investment, even if there's no draconian policies that are actually implemented. This in conjunction with what is now considered extreme trade policy risk, these gauges give unease for most, and it prompts us to look at what's working despite these elevated risks.
What's working? Defense, diversification, and navigating volatility.
You've heard us say this a few times now that diversification is very important, and more recently we've been more vocal about having diversity given some of these macro headlines that we're faced with. I do want to highlight some of the more defensive areas that despite this macro environment have actually been doing well, despite many people not perhaps seeing how well they're doing. And healthcare is a prime example. The sector has lagged last year and even in through 2023, but valuations are very attractive. And despite all of the negative political headlines, the sector is the best performing sector in the S&P 500 year to date, and HHL also posting strong returns. Areas like healthcare are considered superior goods, so typically these are things that we need despite the economy being up or down. Another similar area that's been performing well is global utilities with HUTL, where the steady cash flow from utilities has fared relatively well, and for us, that European exposure has also helped. We are reminded, though, that the tech plus sector still has massive tailwinds over the medium longer term, despite some of the shorter term volatility. And for the more sophisticated advisor, they know as volatility increases, so do option premiums. Looking at HTA, that means we may be exposed to some of the shorter term volatility, but that means we can also generate very high cash flow from the current volatility and still be positioned for the secular long-term growth. For those that are looking at our HDIF portfolio as a one-stop solution, you can see, although we have a relatively defensive positioning, we also have exposure to some of these longer-term growth dynamics and are very well diversified and generating high monthly cash flows given this underlying volatility that we're seeing in the market.
What's new and what's coming soon?
We are delighted to have launched an additional 7 single stocks here at Harvest ETFs, bringing our single stock line up to a total of 14. The Harvest High Income shares continue to get meaningful traction in the market, and we continue to be writing options and generating very big premiums given the volatility that we have seen more recently. We also announced that these ETFs will be available for inclusion in the HHIS, that is the one ticket solution of high income shares during the month of March. Coming down the pipeline, we have filed for 2 new ETFs linked to the crypto ecosystems and Bitcoin. And of course, With our expertise in option writing, we'll be generating cash flows within those portfolios, and also 2 low volatility Canadian ETFs. Keep an eye later this month for our senior portfolio managers discussing asset allocations, low volatility strategies, and insight pieces through healthcare and on global utilities.
Subscribe to Harvest ETF's Insights. Join us and stay informed.